You're sitting with a financial advisor, maybe at a bank, maybe a real estate agent, and they tell you something that sounds smart. Not all debt is bad, they say. Student loans are good debt, mortgages are good debt, these are investments in your future. It makes sense, right? You're not borrowing to buy a fancy car or take a vacation, you're borrowing to build something, to grow. So you borrow, you justify it, you tell yourself this debt is different. 10 years later, you're still paying it off, you're behind on your goals, you're financially stuck, and nobody told you why. Here's the uncomfortable truth nobody wants to say. The good debt concept is a lie, and it's keeping millions of people financially stuck for their entire lives. Let's start with what good debt actually means. The idea is simple. Some debt drains money from you, credit cards, personal loans, bad, they don't produce anything. But some debt gives you something valuable in return, a house, education, a business. These are good because you're getting an asset that increases in value or your earning potential. This feels logical, it sounds smart, and that's exactly why it's so powerful. But here's the problem, this logic only works in theory. In reality, the distinction between good debt and bad debt is much more complicated. Let me show you what I mean with a real example. Two people same age, both 25 years old. Person A takes out a $200,000 student loan for a degree. They're told this is good debt because education increases earning potential. Smart investment in the future, right? Person B doesn't take out the loan. Instead, they work their way through college while starting a small side business. Fast forward 10 years. Person A has the degree and earns $80,000 a year, but they still have $150,000 in student loans remaining. They spend $1,500 every month paying back debt. That's $18,000 every year going to their past instead of their future. Person B never finished their degree, but their side business is now generating $120,000 a year in income and they have zero debt. The good debt person is actually behind. Here's why. The concept of good debt tricks you into focusing on the asset you're getting instead of the cost you're paying. You tell yourself you're investing, but you're actually just postponing your wealth. Let me explain the psychology behind this. Your brain has a trick it plays. It's called present bias. You heavily value things that happen today compared to things that happen in the future. When you take on good debt, your brain gets excited about what you're getting right now, the house, the degree, the business. But the cost is spread over the future, payments every month for 10, 20, sometimes 30 years. Your brain dismisses that because it's in the future. This is why the good debt framing works so well. It lets you ignore the real cost and focus only on the benefit. Here's the deeper insight that changes everything. Debt is not an investment tool. Debt is a way to spend money you don't have today in exchange for financial constraint tomorrow. Yes, sometimes that trade-off is worth it. A mortgage might be worth it if you'd otherwise be paying higher rent. A business loan might be worth it if the business will generate enough income to pay it back quickly. But the moment you label something good debt, you stop evaluating whether it's actually worth it. You just accept it. And here's what wealthy people understand that most people don't. Wealthy people avoid debt whenever possible. All debt, not because they're afraid, but because they understand that debt is a way to make future you financially poorer so that present you can have something today. The wealthy prefer to save up and pay cash. Why? Because it forces you to actually evaluate whether something is worth buying. If you have to save for 2 years to afford something, you probably don't need it. But if you can borrow money and buy it today, the barrier is gone. You buy it. Then you spend the next 10 years paying for a decision you made in a moment. So what do you actually do with this information? First, stop categorizing debt as good or bad. There's only one category. Debt is money you're borrowing today with a promise to pay back tomorrow. Second, evaluate debt based on one simple question. Will this debt help me build wealth faster than not having it? A mortgage might pass this test if you'd otherwise be paying rent. But even then, a 15-year mortgage is different from a 30-year mortgage because the total cost is dramatically different. A business loan might pass if the business generates real profit quickly. A student loan almost never passes because the income increase from most degrees doesn't justify the debt cost over a typical working life. Third, consider the alternative. Instead of borrowing $50,000 for a degree, what if you worked your way through school while starting a side business? It takes longer, it's harder, but you emerge with zero debt and actual business experience. Most people won't choose the harder path because debt lets them choose the easier path today, and that's the trap. The good debt lie persists because it serves someone else's interests. Banks want you to believe in good debt, mortgage companies want you to believe in good debt, the education system wants you to believe in good debt. But nobody benefits from you being financially stuck except the people collecting your monthly payments. Here's the truth, the wealthiest people in the world got wealthy by avoiding debt and accumulating assets. They built wealth by saving money, investing it, and watching it compound. They didn't get wealthy by borrowing money and calling it an investment. You have a choice. You can believe in the good debt lie and justify borrowing your way forward, or you can do the harder thing: save, work, build, invest. One path feels easier today, the other path makes you wealthy tomorrow. The difference is just how far forward you're willing to look. If this changed how you think about debt, the next video reveals exactly which financial advice actually makes you wealthy versus which advice keeps you stuck.